how to make money trading options with naked options. This is David Jaffe from beststockstrategy.com. My goal in this video is to help you and share all of my knowledge. I graduated from an Ivy League university, worked as an investment banker on Wall Street for around 5 years, have been trading for over 20 years, and I probably completed as an investment banker around $5 or $10 billion worth of transactions. And I'm very fanatical about constant improvement. So my goal is, I know that you experience a lot of videos with fake gurus and people telling you that you can make money by memorizing 3 chart patterns and engage in technical analysis and Forex and penny stocks and futures trading. All that stuff doesn't work. All right, if I traded any of those things, regardless of how much I studied, I would lose all my money. So hopefully you're not engaged in that. And hopefully you are interested in learning how to trade options, and you also realize that the only way that you can make consistent money in the stock market is by selling options. And that's where I think we differ. There's a few people who I don't really have much respect for, like Jason Brown. He sells this program. He always tells people to buy call options. That's complete BS. Yeah, occasionally, maybe 1 or 2 out of 10 times, you're going to have a 300% return, but the reality is you're going to lose all your money and lose all that premium that you paid around 7 or 8 times out of 10. So if you're going to lose your money 70 to 80% of the time, in the long run, you are going to lose money. So anyway, I like selling put options, and I really only sell naked put options. The reason is that naked put options give you a substantial amount of protection. 1, you collect the most amount of premium. 2, you're inherently protected by the buying power reductions with put options from trading too many contracts. And 3, in the worst case scenario where that position ends up getting challenged, it is incredibly easy to roll and manage that position. The other alternative is for you to trade vertical credit spreads. I do not like vertical credit spreads at all, mostly because people are inherently greedy. So instead of trying to discipline the greed out of your body and out of your DNA, it's much easier just to avoid being and placing yourself in situations where you will have a propensity to be greedy. And I can tell you that if you trade vertical credit spreads and you have a very minor buying power reduction, it's going to motivate you to sell a lot more contracts. So let's say you would sell a put on Facebook at 158 and then you would buy a 150 put. So that's a vertical credit spread, you have $8 of risk. But let's say on a naked position, you would sell 2 contracts. And in a vertical credit spread, you would sell 20 contracts. I've seen this happen. And then what happens if Facebook falls down to 155? It's in that no man's land. Instead, you would get assigned, if you don't roll that position, for those 20 contracts. So you would have 2,000 contracts of Facebook, and then because your account size might not be large enough to assume those 2,000 shares of Facebook, you would have to close out that position for a loss. Instead, you're way better off just selling a naked position, maximizing the amount of premium that you receive, and in the worst case scenario where Facebook drops to like 153, you can easily roll that position forward and you don't have an anchor and a drag that's attached to you where you constantly have to buy in out of the money put and spend and waste your premium. So we always like naked positions. I make probably 90% of my money by selling naked put options. Let me give you an example of how to make money. All right. Let's say you have an account size. You should only trade market leaders. All right. So you're only going to trade Facebook, Amazon, Boeing, Lockheed Martin, a bank, GS, and let's say like a gaming stock like ATVI. All right. In this example, you pretty much have 4 industries: tech, defense, finance, and then gaming. That's 4 industries. And I only trade and have positions on around 5 or 6 stocks at every time. If you have an account size that's below 100,000, you should have a maximum of 2 positions on. That's it. Choose. Like Facebook and PayPal, Facebook and Amazon, or I mean, if you want some diversification, you can trade PayPal and Goldman Sachs. If you have less than $10,000, you should trade 1 position. That's it. Keep it super simple. Then what you do is, let's use Facebook as an example. Facebook right now is trading at 175, all right? You look at the trading range of where it's been over the past 3 or 4 weeks. It has been trading at 180 on the high end and on the low end around 170. So what you do is you would wait for Facebook to fall to around 172, then you would sell an out of the money naked put option with a strike of around 158, an expiration that's around 6 weeks in the future, and you would collect around $1.20 a share or $120 per contract. The probability that you'd be able to keep that entire $120 is about 98%. Really, the trick and the reason why people don't make money in the stock market is they're not disciplined, right? So what they'll do is they won't wait for Facebook to fall to 172. If Facebook blows past 180 and then it just keeps going up, I just leave it alone. If there's no entry point and it doesn't fall back within the range and reestablish a new trading range and trade on the low end, I don't enter a position. So what would happen if Facebook traded up to like 180, right? Then what I would do is I would see and wait for it to establish a consistent trading pattern. So if 3 weeks from now, Facebook's new trading range is, let's say, between 185 and 200, I would wait for it to fall to around 186, 187, at a maximum of 188. As long as it stays above 188, then I will not touch it. I won't make any trades. And if it falls, or if it goes, let's say its trading range, like I said before, in a month is now 188 to 200 and it's trading at 195. I will wait for it to fall to 188 and then I will sell a 175 naked put. That's it. I mean, you just have to be disciplined, replicate that trade, try to hit singles, and selling naked put options is by far your best and statistically significant way of making consistent profits in the stock market. This is David Jaffe from beststockstrategy.com. You can get $400 worth of free training by going to beststockstrategy.com. Please like, comment, share, subscribe, and if you have any questions, leave a comment below. I always respond to every single comment. Thank you.